All right, welcome to Talk Tickers. Today, we're diving into the Q2 fiscal 2026 earnings from Daktronics, the digital display giant. And let me tell you, this wasn't just some run-of-the-mill report. Nope, this was a huge, market-moving event that really sent a message to investors. So let's figure out exactly what that message was.
And that right there, that was the signal. A 16.3% jump in a single day. Look, a move that massive doesn't just happen, right? It demands an explanation. So let's get into it and unpack the numbers that lit a fire under this stock. Okay, first up, the headline beat. And this was a clear outperformance. The whole story really kicks off, as it so often does, with a massive beat on the headline numbers. I mean, Daktronics didn't just scrape by and meet expectations, they blew right past them. This was the market's confirmation that, yeah, this turnaround story, it's the real deal.
And just look at these numbers. The key thing here is the strength across the board on both the top and bottom lines. You've got revenue coming in at over $229 million. That's a nice 5.4% surprise. But where the real power was, the thing that really turned heads, was profitability. Earnings per share of 35 cents when the street was only looking for 29 cents, that's a crush, a beat of almost 21%. Now that is the kind of performance that gets Wall Street's attention.
And this chart just puts it all into perspective, doesn't it? It shows you exactly how significant that attention was. I mean, look at the S&P 500. The whole market was basically flat that day. And then you have Daktronics just rocketing up over 16%. This was absolutely not a rising tide lifts all boats situation. No way. This was pure, unadulterated, company-specific outperformance.
So you gotta ask, what's really powering all this? Because it's not just about one good quarter. Let's dig into the real growth engine here, which is a record-breaking backlog of orders. And believe me, this gives them some incredible visibility into what's coming down the pipe.
Okay, let this number sink in for a second. Over $320 million. That's their product backlog. Management calls this a multi-quarter revenue runway, and what that basically means is a huge chunk of their sales for the next several quarters is already in the bag. It's locked in. For an investor, that takes a ton of risk off the table.
And it's not just about how big that backlog is right now. It's about how fast it's growing. We're talking a 36% increase from just a year ago. That tells you the demand pipeline isn't just full, it's actually accelerating. The orders are coming in faster and faster.
So where is all this business coming from? Well, the great thing is it's coming from all over. The big headliner for sure is live events. They landed projects for count them, 6 pro stadiums. We're talking 3 in MLB and 3 in MLS. That's huge. But it's not just that. They're also seeing great growth in transportation. Think airports and smart traffic systems. International is strong, especially in the Middle East and Europe, and they're seeing double-digit growth in their on-premise digital advertising business. So yeah, really broad-based strength.
All right, so having a big backlog of orders is great, but you have to actually build that stuff and make money doing it. That's the other side of the coin. So let's look at the execution, the profits, the plans, and the people, and see how they're pulling off this turnaround. This slide really tells the whole operational story. On one hand, you had this massive headwind, an almost $9 million expense just from tariffs. Ouch. But then look at the other side. They completely offset that, and then some. How? Well, first, through smart pricing. They're not just selling stuff, they're selling value. Second, they've made some deep structural cost cuts. And third, they're getting that awesome operating leverage you see when sales ramp up. Basically, every extra dollar of sales is more profitable. The result of all that? A really strong 27% gross margin. That's proof right there that they have pricing power and they're being incredibly disciplined with costs. Okay, so what should we be watching for next? Well, the calendar is actually packed with potential catalysts. Coming up in February, the new CEO, Ramesh Jayaraman, takes the helm. That's a big one. Then in April, they're hosting an investor day with a lay out the long-term game plan. And by the end of the fiscal year, their new manufacturing plant in Mexico becomes operational. That's huge because it gives them more flexibility, and importantly, it helps them deal with the exact kind of tariff issues we were just talking about.
All right, so we've looked at the quarter, we've looked at what's driving the business. Now for the fun part. Let's put it all together for the next call and give you our outlook for DAKT. So after a monster quarter and a 16% jump in the stock, this is the big question, right? What's the call on DAKT? What do you do now? Is there more gas in the tank, or have we already seen the best of the move?
Our call is clear and simple. Outperform.
We think this stock is going to beat the market. Why? Because the turnaround is clearly gaining speed. That huge backlog takes a lot of the guesswork out of future growth, and maybe most importantly, management is proving they know how to execute.
Now, as for our price outlook, look, in the very near term, we expect a little bit of consolidation. What that means is the stock might just chop around sideways for a while. You have to remember Q3 is usually their slowest season, and the stock just had a massive run-up. It needs to breathe. But after that period of digestion, we see a pretty clear path up to that $25 level as the rest of the market catches on to just how well this company is executing. So let's wrap this up. Here's the pitch. Our whole thesis is this: that massive backlog makes their future revenue pretty secure, and the fact that Q3 is usually a bit slower might actually give you a better chance to get in after this big rally. So what's the trade idea? We'd be looking to accumulate shares on any pullbacks, maybe down towards that $18 or $19 level, ahead of the next earnings report. And the big catalyst to keep your eye on? Watch for those Major League Baseball projects to be finished next spring. That's going to be a huge, very public demonstration of just how well they can deliver.
And of course, remember, this is not financial advice. All of this analysis is for informational purposes only.